It's about that time of day again here, boys and girls. Welcome back. 8 o'clock Eastern Time, Monday through Thursday. Welcome to our nightly newsletter. My name is Joseph James with SchoolOfTrade.com, and I'm here on my blog at SidewaysMarkets.com. Now, we have an exciting newsletter for you guys today. Markets were reacting to, a lot of things, right? We got, of course, the beginning of the month. We've got the ECB going into a negative interest rate policy last week. And, of course, we couldn't forget about non-farm payrolls, right? Markets reacting today to non-farm payrolls. Today was a day without any major news on the calendar, but nothing but fireworks on all the markets that we trade most in our live trade room. We had a fantastic day today in our room. Hope you guys did well along with us. Tonight's newsletter, we're going to first start by talking about what happened today. Crude oil pushes higher. Russell pushes higher, right? The old melt up continues. Russell keeps grinding higher. Crude grinds higher. We'll take a look at that in just a moment. Once we finish looking at what happened today, then we're going to grab a little taste of what's up for tomorrow. We're going to look at what's up for tomorrow's news. We've got another day without much news in the U.S., but we got a lot of stuff coming out tonight. Stick around for that. We'll talk about the news coming out this evening from China and how it's going to affect us going into tomorrow, Tuesday morning's London and U.S. session. And then last but not least, the third thing we'll do tonight, we'll roll up our sleeves, we'll grab some charts, and we're going to get ready for more profitable trading opportunities starting in just a few hours. So hold on tight here, guys. We got a great newsletter for you. We'll take a look at what happened in the markets. We'll grab the news for tomorrow. We'll grab some charts for tomorrow, and we're going to give you guys some strategies on no matter what happens tomorrow in any of these markets, you're going to have a plan. Before we jump into the charts here this evening, I do want to remind you all, if you're not watching this video right now on our blog, if you're watching this video right now over on our YouTube page, please make sure to see the information below the video, and there will be a link below the video that will send you over here to our blog at SidewaysMarkets.com. Now, you want to make sure you get yourself over to SidewaysMarkets.com at our blog because of three specific reasons. The first one is because right below this video on our blog, you're going to see the link to download all of today's charts and commentary. So everything you see me using here right now in this evening's newsletter, I want you to pause the video, I want you to follow that link, and download a copy of all the charts. Now, if you're a student of mine, you can bring them with you tomorrow into the trade room. If you're not a student, you can use them right next to my video tonight and make your own notes for you if you want, or you can have them with you tomorrow while you're trading no matter what trade room you are in tomorrow morning. All right, so make sure, first thing, download all the charts and the commentary here for today. Second thing, upper left-hand corner, we have a free pass for you guys and gals to come out and join me in my live trade room any day this week in the afternoons. That's right, Monday through Thursday, we open up our live trade room in the afternoon to guests, trial members, right? If you want to get an idea, if you want to see how simple this stuff really is, if you want to see how we use this newsletter information to make profit the very next day in our trade room, what are you waiting for? Take me up on my offer, click on that little ticket icon in the upper left-hand corner, and register for your free pass. I'm going to send you a special invitation to attend our trade room. And then last but not least, don't forget, head down lower left-hand corner right next to my ugly mug. If you want to make sure you always get this newsletter delivered to your inbox every evening before 8 p.m., give me your name and your email address there. Trust me, I will not waste your time with this. You're going to love the newsletter delivered to you every evening, Monday through Thursday, around 8 p.m. Eastern Time. Give me your name and your email address. I'm going to send you a confirmation email, so check your email and confirm that you got the registration. Alrighty, now you know the three important things here to do over at SidewaysMarkets.com. Without any further delay, let's jump right into it. The markets this morning. Let's first begin by talking about what happened today. Now, at first glance this morning, there were no major news events on the calendar. Usually a Monday morning without any major news, usually it's going to be a sleeper. But this was not your average Monday. Today was a day following the ECB's report last Thursday. It was following, very important, the jobless claims report that we saw last Friday. the Monday following jobless claim, the Monday following non-farm payrolls, which would be the second Monday or the Monday after the first Friday of every month. This is why we always start our session every day by going through what day of the week, what week of the month, what month of the year. This morning in our trade room, our morning prep identified that it was the second week of the month. And we knew right away the second week of the month, first day of the week, we were going to be reacting to last Friday's non-farm payroll report, which of course is the first Friday of the month. Right? So the Monday after that is going to be quite a bit of, speculation, rebalancing, executing plans that were created over the weekend. There are lots of professional traders out there that don't trade non-farm payroll Friday for good reason. It can be nutty out there on non-farm payroll Friday. They take the weekend, right, to make a decision as far as what they want to do here long term, and then they come in on Monday morning and they execute that plan. Today was a great example on all the markets today, especially Crude and Russell, of how that Monday following non-farm payrolls can really be filled with fireworks, right? Because you had a lot of stuff happening. So markets continue to react to last week's headline news, from the negative interest rates in the ECB to the bullish jobs report. We knew why they were moving. All right, here's Crude, of course. We'll stop in with Crude first. Crude oil had a big gap up, as you can see here, right? We've kind of outlined the gap from 103.07 up to 103.46. We gapped way up. That basically tells me between Friday's close and Monday's open. This, of course, will not include Sunday. Sunday evening, the pit session is not open on Crude. That will be electronic or Globex trading. We see here we open higher, right? That's definitely bullish. We close higher. That's bullish. Where's my volume? My volume here, 104.17. Absolutely. Near the highs. Bullish, bullish, bullish. I'm going to go ahead and say we're bullish today, boys and girls, here on Crude, if you couldn't just look at this chart and see that for yourself. What I think to be the most important information that we see here is we get a relatively typical range, even though, right, if you don't count the overnight gap, it was just about 100 ticks, about 98 ticks. Now remember, that's only from 9 a.m. until 2:30 p.m., right? That's all I'm looking at is the day session or the pit session, right? Whatever you want to refer to it as. So this is not a 24-hour chart. So 100 ticks, a relatively typical range. Nothing too crazy about that range. If it was above 200 ticks, then I would say it's wide. If it was well below 100, I would say it's narrow. We're on the narrower side of a typical range. But again, I'm gonna say typical because we had that big gap, right, overnight, and of course that's not being included in this analysis of the range. I think the biggest thing that we see here right now is usually when we see a run like this, usually there's going to be profit taking at those highs. Profit taking? Yeah, right. I'll bet nobody got out of their positions. It doesn't look like anybody took profit. So basically, the biggest clue I see on this one is that we finished at the high. I mean, we're talking at the high. It doesn't look like a single person liquidated their longs before the closing bell. Another very important thing to remember here is the prior week high down below here at 103.69 is still within earshot. It's still within striking distance. And if we go back to the 103.69, there'll be some support waiting there for us. If we slip and fall, then of course we're going to see this gap being filled. And my next number down below here is going to be that 102.67 area, right? That's where we opened and where we closed last week. So before the non-farm payroll news came out, right, before that non-farm payrolls came out, or should I say before they reacted to that non-farm payroll, because this was the report, right, from last Friday. So before they reacted here bullishly, we're looking at 102.67. That's going to be a nice, easy resting point. So if these buyers happen to have a second, right, maybe if they happen to back off their bullishness, look for that 103.69 and 102.67. But this looks mighty bullish, if you ask me, here on the Crude. Typical range, again, opening higher, closing higher, volume at the highs. Unless something changes between now and tomorrow morning at 9 o'clock, we're looking for higher highs, and we're going to continue to buy those pullbacks here, like today on Crude. Made some great money on Crude this morning. Moving forward here, over to the mighty mini Russell, right? Or as we like to affectionately call it, look at old Rusty. E-mini Russell continues with its quote-unquote melt up, right? Most traders are familiar with the term melt down, right? Where price just simply, right, rolls over and dies. Here we have a melt up. We're really just, and for the most part, low volume, going higher. It was a little bit interesting today because we were seeing clearly bullish personality. But it kind of fluttered, right? It kind of fluttered up. Again, it kind of put a visual to that term melt up today. As you can see here, 182 ticks of range, a relatively decent range today. Nothing bad about that at all. We opened near the highs from last Friday. That's bullish, but that was about all we got that was bullish. We did manage to stay above the prior week high, 67.9. The prior week close, 66.6. We did manage to stay above that, but not by much. Very big difference between what I see here on the Russell and what we just saw on Crude. Remember, Crude closed right at the high. Now, on the Russell, you can see, now, given we did have some key resistance that I gave you guys last week in the newsletter, so we were looking for that reversal right around that 80.4. We'll talk about that in just a moment. But as you can see here, though, we opened up near the highs from Friday. We go right above Friday's highs. We pull back a little bit there to try to test that, right, that previous week's high at 67.9. Couldn't quite make it happen. And we finished pretty much right in the middle, a little bit above the middle, but volume in the middle, right, closing in the middle. So really the only bullish clue we have here right now was the opening print, right? We opened up near the highs on Friday. Or I'm sorry, on Sunday. You can see here that'll include Sunday there. So of course there's Friday, right? There's your little tiny Sunday, and then of course you got Monday's continuation of it. So very, very bullish. We had a bullish run here ever since that jobs report came out last Friday, showing a very strong number from non-farm payrolls. So a little bit of a break in the action towards the end of the session today. As you can see, they took some profit at those highs, and now we're going to wait and see what happens next. Very important levels below me here: previous week high, prior week close, prior week open, prior week low. Those will all be price magnets for us. I think the biggest level we have to worry about right now, though, is that prior week high. We get back below the prior week high, that's going to be giving back now a lot of the move that we saw in reaction to Friday's non-farm payroll. So a relatively typical range today. Not a lot of strength at the end of the session, but we can definitely tell, though, these buyers have been here over the past 72 hours. And so we're going to look at some more charts here this afternoon. This chart, obviously, just to give you an idea of what happened today, but stay tuned, though. We get a lot more to look at in just a few moments. Last but not least here, we got the gold, baby. That funny yellow metal. And you might look at this chart and go, where did it go today? Where was the price action today? Incredible, right? As you can see here, here's last Friday. Now, I wouldn't even recommend trying to figure out why gold went up and then down. It's a very, very complex system, or there's so many variables that go into how gold reacts to non-farm payrolls. And remember, we're dealing with a negative interest rate policy in the ECB. So you have to assume that what you're seeing on gold right now is going to be unprecedented. We have a lot of analysts, a lot of traders, a lot of fund managers, I'm sure, that are really struggling to pin down, what's my plan with gold? How do I participate in this? Again, the ECB changed their interest rates to a negative number last week. Non-farm payrolls came out very, very good, right? Maybe not that strong, but still definitely not a weak report. So to have gold jumping higher, that definitely doesn't look like anybody was listening to the non-farm payrolls. Looks like right now gold traders are more worried about, more concerned about what's going to be the result of this ECB announcement last Thursday. And we're probably going to have to deal with a little bit of slop and chop here for the rest of the week here on gold until they get this thing kind of figured out. A very narrow range. We opened up right near the highs there from Friday's range. That was bullish, right? But that's about it. We closed back below. Now, here's a very important clue. We went right back to our prior week close. And so if you ask me, Joe, why do you say there's a little bit of analysis paralysis, right? Why do you feel that the traders are looking for more clues? Why aren't we confident going higher here? Because look where we closed. If these buyers were confident going higher, they would not be hanging around the prior week close. Okay, so when we close here on Friday, right, around this 12:53 area, we go right back to that location again on Monday morning. Clearly, these gold traders are waiting for something. Clearly, there's a very, very narrow range. And so we're going to keep watching this, right? We definitely know that this uncharted territory, these negative interest rates that we heard from last week from the ECB, we know that's playing in big time, right? So definitely a big factor here for gold, and we'll be watching closely here to see what the rest of the week holds on that funny yellow metal. All right, now that we know more about what happened today, let's get ready for tomorrow. Get ready for tomorrow? Sounds good to me. Check my news here. Now, I don't need to look very far besides tonight. We got a lot of important news here. We had no major news today. Again, the Monday after non-farm payrolls. Nothing new there. But we do have a lot of news here now coming out. I've got news coming out here starting at 7:50 from Japan. We've got 9:30 in China. 9:30, we've got the consumer price index, right, and the producer price index. Very, very important news coming out this evening. So if you're a happy hour trader, right, here in the U.S., if you're on the West Coast, trading happy hour, or you're trading in the middle of the night in New York, or you're trading early in the morning in London, or your typical trading session in Asia, we know that if you trade in Asia overnight here tonight, starting at 7 p.m. Eastern Time, you've got a great opportunity here with some big Red Star news, right? News from China, whenever it's Red Star news, you know the rest of the world's going to be watching. So look no further. We've got some fireworks shooting off here in just a few hours, starting out of China. Moving forward now, you'll notice we have very little news in the U.S. session tomorrow. We continue with China until we go into the industrial production out of France. We've got retail sales from the Swissy. I've got industrial production from Great Britain. GDP comes out of Italia. We've got and again, these are really minor here. NFIB, small business optimism, 745. Store sales, Red Book, 855, well, whatever. And then, of course, you got my girl Janet Yellen, right? Her favorite news report comes at 10 o'clock tomorrow morning. That's all we get tomorrow, guys. So we've got a bunch of news, 2:45, 3:15, 4:30, 5 o'clock in London. But as far as U.S.-based traders, all we have, right, is my gal Janet Yellen's favorite news report, the JOLTS report. So we got 10 a.m. It's not a starred news report. It's not Red Star. So I'm not going to expect much out of it. Tomorrow, I would expect the biggest clues are going to come right out of what we see coming out of London. And if you're a member of mine, whenever you hear me say coming out of London, what am I thinking? Study the range that happened from 3 a.m. until 7 a.m. And that will tell you some very important clues going into the U.S. session. Tomorrow, we'll expect to see more of the same from today. Hopefully, we get exactly the same because we made a killing buying Crude and Russell on the way higher. Even made some money with the reversal in the Russell today. So very easy money today with this very clearly bullish trend. Tomorrow, again, another day in the U.S. without any major news. We've got your European news, though, and we'll be watching to see tomorrow morning at 8 a.m. when I open the trade room. We'll be watching closely to see how the market reacted overnight. Then we'll use that information to make educated decisions tomorrow morning in our live trade room starting at 8 o'clock in the Eastern Time. All righty? So big news in China tonight. We got a couple big news events. There's one specifically, 2:45, 4:30, 5 o'clock. And then really the only news report that's worth even mentioning is the JOLTS report, right? The job openings and layoffs number tomorrow morning at 10 a.m. And even that, again, very, very minor news report for tomorrow in the U.S. Let's keep moving. Now that we know what the plan is for tomorrow's news, let's jump right in here to the old Texas tea, the black gold, the crude oil futures. As you guys know, we did push higher here over the past few days. We're trying to break free of this trend line on my daily chart. So we are running right into daily resistance. You can see here making our way upwards towards that 106.01. That level has been there for, boy, a few months now. So 106 even looking to be on our radar here thanks to the daily chart on the crude. Don't forget, all these charts I'm using right now, you can download by following that link below the video this evening. Moving forward, here's some charts now we can use. You can see us running right into that trend line. You could probably go out and draw another one here as well, right? So you can see kind of running right into that trend line here. So we definitely have some resistance overhead right now on crude, and that's going to lead me into the next chart where I'm going to give you guys some opportunities here to be buying those pullbacks on the crude oil futures. Simply glancing higher here, and you can see we've got multiple trend lines. I've got 106.56, 107.93, 108.83. Those are going to be important levels here tonight. I'm not sure how much of this we'll get a chance to use for tomorrow. Obviously, 106.56 is about $2 away, so probably not going to get there tomorrow, but hey, this is crude we're talking about, and if it's anything like the 2013 version of crude oil futures, we could be at 110 tomorrow. So we'll see what happens tomorrow, but definitely got bullish personality. We're above all the key moving averages. Boy, we just missed this pullback on Friday. Remember this? This has been sitting here all week here, or all last week, 101.45. You can see what happened. It pulled right back. It went to 48, right? That's definitely close enough if you ask for me. So once we started to rise off that high there, what a great job the newsletter did last week. I'll tell you, if you followed the levels I gave you last week on all of these markets, you were on the right side of the market every step of the way, and I gave you some fantastic turning points to use. Then all you needed to do was find the entry pattern, right? Really, really simple. Moving forward here now that you know what my 89 anchor chart looks like, now let's get our sleeves rolled up here, and here's how we're going to participate on this crude. Now, you've heard me say this many times before. I want to buy when price is at a discount. When do I sell? I want to sell when price is at a premium. Whether I'm buying a car, selling a car, whether I'm buying a home or selling a home, or whether I'm buying crude oil futures contracts. Right now, are we at a premium price or are we at a discounted price? At a premium price, right? We're well above the key moving averages. We actually just recently made a new higher high, right, as I record this video right now. And so as you can see, we are priced at a premium. But Joe, it's moving higher. How do I get into this thing? Well, that's why we got in long earlier this morning. This morning, we bought this move way down here, right? So you got to get in on these things before this price moves into premium price territory. So if you're trying to buy right now, you're late. You're late. Price is at a premium, which means we have two choices right now. One would be to wait for price to pull back, either to 103.69, 103.09, or 102.24. I could also use that trend line as well, right? This little trend line here. That will also be a very solid level of support. So what I want you guys to keep in mind is right now crude oil is, well, if I believe in the term overbought, I would say it's overbought. Markets aren't overbought, right? There's no such thing. But I do know that right now we are priced at a premium, and therefore I would like to stay patient here. Basically, at a premium, I want to be a seller. But the problem we have now is trying to be a seller with this very strong bullish trend. Just want to be careful. All right, so one option here is to look for price to bounce off this trend line, right? The 105.22, whatever the case may be, and look for my short, either with a double top, a two-step pattern, right? A wave reversal, whatever the case may be. But just be prepared, though, because this is going to be counter trend. It's always a little bit more difficult to get those lucky bounces trying to trade counter trend, but that's also one option. So two options. Option number one, I'm looking to buy the 103.69, the 103.09, looking to buy the trend line, and the 102.24, right? Looking to buy all those levels of support on a pullback. Remember, I'm not placing a buy order here. I'm going to wait for price to test the area, and then once I start seeing it go, then I know it's time to go find that entry pattern. Okay, so looking at buying opportunities below us, 103.69, 103 even, 102.24. That's where the easy money will be. And then, of course, if we go higher here, I will be looking for a reversal opportunity. But at the same time, tomorrow, if we see a very strong trend, though, if this trend continues the way it was today, you're foolish for trying to sell the highs here. So what you're going to do is, and remember, I'll update this in real time tomorrow morning. So if we just keep on cooking higher here, you've got to wait for price to pull back off those highs. Pull back off those highs. Do not fall victim to trying to buy the highs, all right? That's going to be, well, it might make you money once or twice, but in the long run, it's not going to be a proven and profitable strategy buying at those highs. So I've given you guys two opportunities here on crude. The higher risk opportunity is going to be selling these highs, right? Look at the reversal pattern. The higher winning percentage opportunity is going to be waiting for price to come down and give me a chance to buy either the 103.69, 103.09, the trend line, or the 102.24. All right, guys? Now, one more thing here overhead. If we do happen to go higher here, I've got targets at this trend line, targets at 105.22, targets at 107.26 and 107.72. I know it seems a little bit ridiculous to have 107 up there right now. We pretty much skipped the whole 106 block, but that's what the charts are telling me right now. What I would expect is I would expect us to push a little bit higher here, give us a pullback, and then start to give us some opportunities here to get buying again if we don't see a big bunch of profit taking from the sellers or profit taking from the buyers, but which will result in sellers on our time and sales window. So really right now, I'm waiting to see tomorrow morning, are these buyers going to continue to push this thing higher? If they do, we'll take the time out here to buy those pullbacks, looking for the wave pattern long. If we don't push higher, I'm looking for buys here below me. I've got all these levels here marked up for you. And don't forget, if you want to get your hands on this chart as well as all the other charts, don't forget to go over to School of Trade's blog at Sideways Markets, right, and download all of the newsletter charts and commentary right below today's video. All right, that way you've got those when you need them. Moving forward here, so now you know what the plan is here on crude. How about that mighty mini Russell? Well, I think I speak for everybody today when I say, thank goodness we got the heck out of this area right here. I was worried if we didn't get out of that area on Friday and, of course, into today, I was worried we might have another week of kind of slopping around back and forth like we had last week. Clearly, though, it's very easy to assume why this price moved higher. Non-farm payrolls came out higher than expected. Even though the employment rate stayed the same, we did see private payrolls were dramatically improving. A lot of new jobs being added right now to the economy. And you can see here it blew right through the previous resistance zone right up to that 1180.6. As you can imagine, this is a great spot to look for a reversal. All right, we're well bought, right? We're way up top near the stratosphere up top here at 80.6. And so this would be a great example here to look for a reversal off of this resistance at 80.6. I want you guys to see, though, here that we don't have another support level until we collapse back down to 1129.6. So we get a lot of room here to go right back where we came from. Draw a little trend line here. All right, so a little bit of support there as we go lower. But what I want you to see on this daily chart, this 1440 minute, is just the overall range and where we are in the big picture. So you can see here, we've got the all-time highs back up around 1208.4. We've got this resistance here at 1180.6. If we do happen to collapse here, use that trend line, use that 29.6 as your target for the short here. Looks like a pretty good spot here to start looking for a reversal. Now with that said, we zoom in a little bit faster now, a little bit faster time frame here, and you can see this is just that same chart, but now in a much faster time frame. This shows us this very symmetrical move, right? If you measure that low to the high and then project it from the most recent low, you're going to see we have a very almost perfect symmetrical ABCD pattern. So remember I was saying earlier on the daily chart, it looked like we were ripe for a reversal. Now we have a reversal setup that's triggering right now. We run right into the 80.6, and basically now I have a bullish trend, and just like we talked about on crude, yes, I could sell this thing short now, but it's going to be the lower percentage way to trade. Why? Because we're bullish, right? So I want to be a buyer. But where am I going to buy if I buy right now? Yeah, I know. Same thing we saw on crude. We're up at the highs. I can't buy at a premium like this. So what's a day trader to do? We're going to wait for price to pull back. 1145 also runs right into the low of that channel. Obviously, the low of that channel will be a great place to be a buyer if I can get my hands on a buy at the low of that channel. I've got 29.6. I don't think we go here tomorrow, but 11.5. The ideal scenario here is going to be to get price to pull back. I would love to sink my teeth into a buy there at 11.45 as it lines up with that new trend channel we drew in, right? Wouldn't that be just ideal? So 11.45 even, remember, I'm not blindly buying it. I'm going to wait for price to pull back to this area. Once it starts to push higher, then we know it's time to get to buy-in on the mighty Russell. 11.45, one spot here to be a buyer, another spot down here, 29.6, 17.5. Again, really, there are three different options on this chart. If we go sideways, we'll mark up the highs, we'll mark up the lows, we'll buy the highs, we'll sell, right? We'll buy the lows, we'll sell the highs. If price goes lower, my target for the shorts are 11.45 even, or depending on when we get there, we may have to deal with that low of that channel. So 11.45 even, that's where I'd like to go short too. But if it stumbles a little bit, it may end up being the low of that bull channel. Just be aware of that. And of course, the third scenario, what if price goes higher? If price goes higher, we have some major resistance waiting for us at 80.6. But once we can get through 80.6, we're off to the races, buying here again up to that 1200.7, which is just a hop, skip, and a jump away from the previous all-time high at 1208.4. Okay? So now you know more about the plan here. What I want you to see right now is how overbought. Again, I don't really like that term, but we are overextended here. We're at a premium. If I'm going to buy, if I'm a bull on the Russell right now, I can't be buying right here. Unless I know for a fact we're going higher. But the problem is, if I buy right here, right now, you know what's going to happen, right? It's going to pull back. It's going to make me wish I would have never touched my computer. Then, after I say, mercy, 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 I got out of that trade, it'll then keep going higher, right? So don't buy the highs. Buy the lows. Buy at a discount. Buy at support. We sell at resistance. But again, trying to sell at this resistance at 80.6, well, again, we're going against the trend, right? Against the trend. Moving forward here, now that we know what we have to deal with in the Russell here, here's one time frame faster on the old Russell. Now remember, we talked about what if price goes higher, what if price goes lower, what if price goes sideways. As I zoom out on this chart, you can see there's that channel that we found earlier, right? There's that channel that we found on the 89 anchor chart. Now I zoom in a little bit closer here now, and now we have a much better vision on what the ideal scenario is going to be. First of all, you can see there's that 80.6 resistance overhead. That again is one of the reasons why we're expecting a reversal. A little bit more important of a reason is the fact that if you looked at your 89 anchor, you can see we had symmetry, right? It was very symmetrical on the 89 anchor. Again, if you go back and look at the 89 anchor, you can see if you measure, right, low to high, low projected to high, right, that's almost identical, what we call symmetrical price action, right, or a symmetrical projection. So price took as long as it did going from A to B as it did from C to D. It just so happens to run right into that 1180.6. So unless we have some significant strength here from these buyers, we're probably going to see some profit taking. We're probably going to see a little bit of a pullback. So let's get ready now. Let's be prepared for what if price goes higher, what if price goes lower, and what if price goes sideways. If price goes sideways, my plan is going to be to mark up the high of the range, the low of the range, and then we're going to trade this as a sideways range, right? So looking for buying at the low, selling at the high. Big range today, so it wouldn't surprise me if we go sideways tomorrow morning. Again, we have a little bit of that analysis paralysis right now because of all the stuff that's happened over the past 72 hours. If we go sideways, we'll trade the market like a sideways range. If it goes higher, now here is always a difficult spot. And members, you guys might be getting that feeling in your stomach right now looking at it. If it goes higher, now here's the problem. We are going to be trading long at the highs of a bull channel. And the record, right, skips. Remember, where's the most difficult part to trade in a bull channel? At the highs. How about this? Where's the most difficult part to trade in a bear channel? At the lows. If you're a member of mine, you've seen that many times before. In fact, last week on Crude, we made a killing buying the low of a bear channel after trying to watch it just grind lower. So my first knee-jerk reaction here is be careful. If we go straight higher here tonight, that trend line, the top of that channel, is going to make for an ugly session. What if we go lower here? Right? If we go lower, I want to get below 67.9. Get me below 67.9, and I'm selling short down to that 1148.2, 1145.2, right? 1140.6. Please keep in mind that will be a counter trend trade. So be careful with your risk capital, right? There's no need to force counter trend trades on small accounts. So just be careful out there with that counter trend trade, right? Not the time to be getting too aggressive. And just like we said on Crude, we really have to take a moment just to make sure we know we have the right personality. If we're very bullish tomorrow on Russell, we're wasting our time looking for reversals. So tomorrow morning, I will be taking the time tomorrow morning, like I do every morning, and going through our morning routine and making sure that everyone is on the same page, which includes looking at the overnight range, looking at the market personality, and trying to pick up on, are these buyers really still as strong as they were earlier on in the week? So 3 scenarios. We go sideways, we're trading like a sideways range. If we go higher, be careful because we have the top of that channel. I will still be looking to buy here, but I'm going to be very selective. I want price to pull back. That's what I want. I want price to pull back. I'm looking for short selling opportunities below 1167.9, and I got targets waiting for me here to the downside. Then we're going to find ourselves now priced at a discount, and we can start buying again. How easy is that, right? How cool is that? So rather than trying to force the long trades right now, why don't we look for either a selling opportunity, okay, counter trend, or just stay patient for price to pull off these highs. That way you're not having to worry about buying the high, right, or buying at a premium. And if you're not worried about buying at a premium, you should be, because over the long term, you're not going to make money that way. All right, there's my Russell. Looking good here, mini rusty. And then last but not least, we got the gold, right? The gold's been a sloppy market, analysis paralysis. It jumped up last week after the non-farm payroll report came out. We have to assume right now the gold's going to be a little bit sloppy until there's a consensus among among the market participants that we kind of know what to expect here out of this ECB announcement last week. Remember, we've been talking about this for a few weeks now. The ECB with their negative interest rates really making gold traders work for it right now. Very narrow ranges. We just don't have the personality we're used to seeing here on gold. So I'm going to recommend staying very patient right now. On this daily chart, I've got resistance levels overhead at 72.9, 86.3, 97.1, right, 12.6, and 21.8. I have support levels below me. This support level here at 41.6 has been there for weeks, right? We've known about that for weeks. And then, of course, additional level here at 1228.2. Don't forget, you got this bearish channel we can see here right now. So it's very easy to see here. We are definitely bearish here on the daily chart on the gold. But let's start getting a little bit closer here. So we know we're bearish, right? We had this consolidated range a few weeks ago, right? We bought the lows, we sold the highs, and then we bam, right? Just drops out of thin air. Very typical for the breakdown on that. As we go as we go lower here, as you can see, we literally bounced right off that 1235.5. Now look where we are. I've got no support. I've got no resistance. We're pretty much just sitting here in no man's land. You know me, I would much rather, if we're bearish, I'm going to sell at these resistance levels. I'm selling 69.3, 76 even, 85.6. I'll sell the trend line, right, at the highs of that channel. I'll sell all of these areas. But again, the reality is that we're not out of the woods yet. We're still dealing with a lot of this analysis paralysis. So which way do we go? As you can see, we're bearish right now. I got a red cloud, right? Lower lows, lower highs. But you can just tell. You can tell right now that gold is just really waiting on something. Are we going to cook higher, back to that 1276? Are we going to push lower and finally finish the move we started from 2 weeks ago? Difficult to say what exactly happens right now, but here are the levels that I'm going to be using here. Here is my fastest of the anchor charts, and this anchor chart, you can definitely see. Are we going to go higher? Are we going to go lower? What direction do you want to go here, gold? Now, of course, if I follow the long-term trend right now, I'm looking only for shorts. But where on earth am I going to sell these things? Right? As you can see here, we got a bunch of wide open space here right now on gold. Right? A bunch of wide open space. Now, personally, I think we might be sitting on hands here tomorrow if we don't get out of this little area here. But we got buy zones here below us at 47 even and 42.2, or should I say 49.1, right, and 44 even. Overhead here, though, if we go higher here, all right, if we go higher, we'll look to buy, get a buyer's target overhead. If we go higher, I have resistance levels here at 7.9, 1.5, 67 even, 71.4. Okay, those are going to be targets for your longs. So if we do pull back here to 1249.1, that's your chance now to start looking for a buy. All right, but again, I really need to get a better vision as far as what the personality on gold wants to do. We jumped up after non-farm payrolls. We jumped up after the ECB announcement. Now we go sideways here. So right now, I don't have a very strong opinion on what our short-term trend is. So tomorrow morning, 3 scenarios. The long-term trend is bearish, which means if I have to guess right now, I'm guessing to the short side. What if price goes sideways? Buy the low, sell the high. If price goes sideways, we mark up the highs, we mark up the lows, we buy the lows, we sell the highs until it stops working. If price goes lower, I'm going to be looking at a possible reversal off of this 1249.1. Target overhead, right? Target up top for that reversal. Remember, though, I've got to really pay attention tomorrow morning to see what the market's personality is. If I try to trade long and this personality is strong to the bear side, I'm wasting my time and I become a donor to the market, right? I don't want to donate money to the market. I want to make money tomorrow. So again, it's going to be a little bit challenging trying to buy that 49.1. So what I'll do is I'll wait for the price to bounce. I'll look for the reversal, and then we'll start following that move higher. I'm not going to predict. I don't have the confidence to. Until this gold really tells me that it wants to continue with this bearish move. The problem is we've been trying to go lower on gold here since pretty much the end of May. So it's been 2 weeks now, and it's not been able to get the job done. So what I expect to have happen here is either we finally get back to business going lower, And of course, if that's the case, I want to see a new lower low so I can start looking for shorts, right, as we go lower. If it goes sideways, I'm buying lows, I'm selling highs. If it goes higher here, which, to be honest, is what my gut tells me it's going to do, right? The way that I see this chart right now, obviously something else can happen, right? There could be news that comes out here overnight. You got news from China tonight at 9:30. So remember, I can't predict the future, but my gut tells me that since we couldn't get much done here, my gut tells me we go higher here. And so tomorrow, if we start seeing new higher highs here above that 57.9, you know what we're looking for, right? Targets above us at 67, 71.4, and 72.6 overhead. So be on the lookout tomorrow on gold for a sideways trading range. Buy the lows and sell the highs of that range. If we go lower, be very careful trying to be a buyer as we go lower tomorrow because the long-term trend is down. If we go higher, again, that'll be a little bit easier. It's going to be a little bit easier to buy tomorrow morning because of all the chop and slop we see here. So if we go higher, targets above at 67 even and 71.4. All right, guys? So now you know the plan here. Careful on gold this week until we start seeing something thaw out here a little bit after the ECB announcement. I'm still waiting for that big kind of decisive move to tell us now we know what direction we're going in. All right? Big amount of reaction to the news we saw Thursday and Friday last week. And of course, last but not least here, I couldn't forget, right? We couldn't forget about heading back over to SchoolOfTrade.com. Make sure you suggest, right, or make sure you register here for our nightly newsletter. That way you get all the newsletter charts delivered right to your inbox. And guys and gals, I want to thank you so much for being a part of our newsletter here this afternoon. If you're with me today in the trade room, great job today in the trade room. Today was just a great example of a Monday following non-farm payrolls. And I want to invite you, grab a friend, grab a few friends, head on over to SchoolOfTrade.com and check out our free trial. Our free trial, you're going to learn more in that free trial than you're going to get anywhere else that you got to pay for on the internet. I'll tell you that right now. We offer 3 levels of membership: beginner, intermediate, and advanced. Just so you know, you do not need to be an advanced trader. Start with the beginner. And then you can be crediting your investment into your intermediate and then your advanced. Call me in the office any time of the day, Monday through Sunday. I look forward to answering your questions about what it means to be a member. But don't forget, join that free trial, join the newsletter, and I'll invite you to come out and join me tomorrow in my trade room in the afternoon. Or if you want to see how we trade all this great stuff in real time, that's right, join me tomorrow morning as a brand new student. Every day in real time, I run through all these charts that we use in the newsletter. And then we put together a plan for that day and we execute our plan. If you want to get short-term trade calls with exact entries and exits, you've got to come join me tomorrow morning in the trade room. Signing off now from our corporate headquarters in slightly foggy Los Angeles, California. We get a big Game 3 tonight. Go Kings, go. Looking forward to raising the Stanley Cup on the west coast of the U.S. here this year. And guys and gals, thank you so much for being here. Tomorrow morning, 8 a.m., Trade Room opens. Tomorrow afternoon, 2 p.m., Trade Room opens for guests. And we'll see you guys back here tomorrow evening, 8 p.m. Eastern Time, Monday through Friday for our nightly newsletter. Don't forget to download today's charts. Share that information with a friend. And if you guys have any questions, you know where to reach me. Signing off now from our corporate headquarters in Los Angeles, California. My name is Joseph. Thank you so much for being here. Adios, amigos. Bye-bye for now.